Welcome to another episode of Multifamily Talks. I'm Carl Whitaker, one of the co-hosts here at RealPage. Today's guest was a very special guest indeed, Michael Bull, president of Bull Realty and lead host of America's Commercial Real Estate Show. It felt interesting to kind of flip the script on Michael, who's usually hosting these podcasts, but we talk about the investment landscape. We talk about what the appetite for investment looks like in 2024. We hope you get a lot out of this episode, and we'll be back soon.
Thank you for joining us. It really means a lot that you're able to join today.
Man, glad to be here.
Perfect. Well, I guess just for the edification of our audience here, can you tell us a little bit about yourself? Really appreciate you joining, Michael. Can you give us a little bit of background, and then I'll jump in afterwards and kind of give the audience a funny little anecdote. But just want to give you a chance to introduce yourself to the audience real quick.
All right. Well, Carl, thanks for having me. I started managing apartments when I was in college at 18, and I got my license at 19. And I tripled the size of a small management company that managed apartments. And then I started selling, and my first sale was at 19. It's a 20-unit apartment building. And then at 22, I started selling apartments full time. And I developed a nice practice in Atlanta selling apartments. And I studied management, renovation, collections, just everything to do with property management and apartments and sales. And I developed a nice practice. And then 26 years ago, I started Bull Realty, so I could work for a company known for integrity. And so I did that. Now we have about 50 people. We do business all over the Southeast U.S. We have a big multifamily division, but we also have senior housing, every sector really, hotels, office, retail, everything. So I lead Bull Realty, and that's me.
Yeah, thanks for the background. And just for our audience here, Michael also hosts his own podcast series. So I wanted to give a little plug for that. And our paths have crossed in years past. Michael reached out to us, and we're probably on your show, once or twice a year. You're gracious enough to have us on pretty often.
Yeah, we love having you on. You guys, you provide great information. So thank you.
Yeah, and you want to give the audience just a little bit of background about your podcast. I want to make sure we give that its due feature time.
Yeah, well, thank you. Yeah, America's Commercial Real Estate Show is a show I started 13 years ago, I guess, and started it on one radio station in Atlanta. And it's funny because I was going to do a local show and take calls and answer questions about commercial real estate. And right before the show was about to start, they said, Michael, we're building new studios. You're going to have to record it. I thought, oh, no. So now I've got to have content and know in advance. And so my first show was October 2010 on commercial loan workouts. And it was incredible information. I did a lot of commercial loan workouts and did a lot of work for borrowers and banks and distressed real estate. So I had a lot of experience. And I realized after I did the show that it was very valuable to people around the country. And I remember taking the third step out of Salem Media, the radio station. I thought, you know what, this show could be really valuable to people around the country. So then we started actually telling people about it. I didn't even tell anybody I was doing a radio show because I didn't know how bad I'd be at it. I knew I'd be bad, but I didn't know how bad. So we started telling people, and it grew. And then we've done a show every week now since October of 2010. And it's on all the podcast sites. It's on YouTube and the show website, creshow.com.
Wow, so it's been 1 week it's been one a week consistently since 2010. I didn't realize that.
Never missed a show, ever.
Wow, that's impressive. I mean, it's, I can speak a little bit from the podcast side. It's, it's hard to get that consistency, and, it takes a lot of effort. So that's incredible to hear.
Yeah, for the first 3 years or so, it was an incredible amount of work and a lot of hours. You don't want to, as a commercial real estate broker, you don't want to put out something flippant or low quality. So, we created a lot of quality content, and we want it to be very good. So in the first 3 years, it was just a horrendous amount of time. But then it became easier over time, right? And and the audience became a lot larger, so it became more worthwhile.
Yeah. Well, and again, truly for our audience that ends up listening to this, I mean, I encourage y'all all to check out Michael's show. I mean, he's got a great team there that puts together a really professional, very solid set of podcasts and goes beyond just the apartment space. Obviously, we're focusing primarily on apartments today, but I know your business there crosses multiple lines of commercial real estate. So certainly encourage y'all to check it out if you get a chance. I did have a question for you, though. You mentioned starting in 2010. You've been in the industry for, you said almost, I think you said you've had Bull Realty for almost 30 years now. Is that right?
Yeah, 26.
26. So you've seen a couple different cycles. You've been through them. We're certainly in a unique cycle here as we kick off 2024. What are you seeing in the space that you're in? Just what are some things that stand out to you trend-wise as we kick off 2024?
Yeah, it is an interesting cycle because, as you said, I've been through some really tough cycles and really went through one in 87 where the S&Ls all failed and apartments, most of them were foreclosed on. Every deal I had fell through. And it was like, that was the world ending here. It was crazy. Freddie Mac became the largest apartment owner in the country. I got through that, started selling apartments for Freddie Mac. And so I got through it. And I think as I've been through the downturns, this one's kind of unique in that the sudden increase in interest rates is just unprecedented. And it's caught a lot of folks off guard. And I think really in the multifamily world, maybe more so than others, because I think it's just been such a popular sector, with the rapid rental rate increases that we've had. A lot of people have jumped in, and there's a lot of folks in commercial real estate. This has been such a long, great cycle that they haven't been through a down cycle like this. And so I think it's interesting to see the people experience it for the first time and helping them through it. And one of the things that I try to share with them to help them through it is, in my opinion, we're at the more normal historic interest rates. And, you want to make decisions, looking through the windshield, not the rearview mirror. And, I think if you own apartments and you're selling them, if it's the right time to sell them for you, for your equity, for your debt, for the sponsor or the partners, you might be still selling it in a profit range because you had so much rental rate increases. But I wouldn't, suggest that you think that, I'm going to get back to 2021, values. I just don't see that happening. And we're seeing a lot of sellers that are selling properties and going, you know what, I'm still making a profit. I'm still getting a good price. Maybe I'm not getting that 4 cap, but I'm still making money at a 6 cap. So I think the rapid rate of the interest rate increases is really unique to this cycle.
Yeah, and it's interesting to compare that against previous cycles. And you may have saw me taking a note there. I love that quote: "Make decisions through the windshield, not the rear view mirror." So I was kind of cheating and taking that note down. We might use that as a clip for this for this podcast whenever we're floating it out there. But I think you do bring up a good point that the interest rate increase, it's not necessarily that the levels themselves are abnormal even. It's just the degree to which those came up, or the pace at which those came up, and then further at a time when performance was just on the cusp of starting to moderate. And again, we've talked a little bit about this on our sessions on your podcast, but just the timing of everything has made this market so unique. And then the last thing I'll add here, and again, curious to get your thoughts, is that I can speak from my perspective. When the last time we went through a quote unquote down cycle, I was just starting college, so it's a different market for me. And on the apartment space, especially for a lot of these folks that are in the front office who are leasing apartments for the first time and making some of these decisions, it could be the first time they've been going through a down cycle too. So while looking through the windshield is important, I think the rearview mirror can help provide a little bit of context for some folks, especially those that are maybe newer to the space.
Yeah, absolutely. Especially if you're in a distressed situation, right? And thinking about what borrowers have done and what lenders have done. And we've done a tremendous amount of distress work and working with borrowers and lenders in distress situations. And yeah, we're dealing with some clients who are controlling really large numbers of assets, really large values, who have really never experienced this before. And there's a bit of a learning curve there, but I think we'll all get through it. Well, it'll all turn out okay.
Yeah. So from the folks that you interact with, and again, you're interacting with a really wide spectrum of people across many different commercial real estate sectors. How much rumbling, or how much are you seeing out there in terms of distress? Is it more anecdotal? Is it starting to come up, or is it kind of segmented depending on what part of the space you're in?
Yeah, I think we're starting to see more. There's a good bit of workouts being done, and I think borrowers who are proactive and cooperative, most lenders are trying to work through, and they don't want to own the properties, but we're also getting some foreclosed listings and taking those out to market. And in each case, it's been the borrower was uncooperative, or the borrower was hurting the asset. And so it kind of forced the hand of the lenders to have to come in and foreclose. So, yeah, I think we're going to see a bit more of that. But I think, more lenders in this cycle tend to want to work through these rather than just take them back than I've seen in past cycles, where it seemed like the lenders were faster to take things back. Now that can change, and I've seen that too, where we go in a cycle and they're trying to do workouts, and then and lenders say, well, we don't have problems, and then finally go, we do have problems, and this workout isn't working out, and I'm going to have to take it back. But I would tell borrowers, sponsors, look, just get ahead of it. Be honest, be straightforward. Partner with your lender; they are a partner, and be straightforward with them and work through things. And that's your best bet.
I love that perspective. That exactly that it is a partnership. And we were talking to somebody late last week who offered some what I thought was really sage advice, where one of the things they're seeing on some of their, and it's not necessarily the long-term fixed rates that they have, because those are in really good shape. And I agree with them. It's a lot of the maturing loans in 24 and maybe early 25, maybe some of those bridge loans that were issued in years past that are coming up for maturity here. But they offered the advice of, when working with lenders, amend and extend, and there is that willingness to work across party lines there. And I think what it really points to, at least in the multifamily sector in particular, is that, for most markets, fundamentals are still pretty strong. We're not seeing this capital market hiccups that we've seen over the past 12 months. It hasn't been met with a demand pullback a la the Great Recession, or, going back even to the 2000s when the tech bubble burst. Fundamentals are still pretty strong. And I think that that's going to be something that can really help keep the industry in pretty good shape as we go through 24. Even though performance may be challenged in some markets, it's not being met with a true demand shortfall. And again, just kind of curious, you're in the Southeast, and we'll talk about this here in a second. Is that generally what you're hearing from folks on the ground, is that performance is still relative, or I say performance, demand is still relatively strong in the apartment space?
Yeah, we are. And we're headquartered in Atlanta. So we do a good amount of business in Atlanta and throughout the Southeast. And Atlanta still has strong demand, and we're not overbuilt in too many submarkets here. But I think people are still very positive about the multifamily market, especially in the environment that we're in here, and about demand and continuing demand. And I think another thing that's kind of positive is, I think new supplies is going to start dwindling, right, as these projects are finished that have been underway. So I think the future values of these properties could be very strong because of the construction costs and interest rates. As you know, I don't have to tell you, new supplies is going to start dwindling.
Yeah, we put together an analysis earlier today looking at starts nationally, and from 2022 to 2023, starts are down, call it roughly 40% with some rounding. I think that's actually rounding down. So, just like you said, at some point, supply is pretty easy to forecast at a certain level. It's just what's starting today is going to deliver, call it 12 to 36 months from now, depending on where you're at. So we are seeing that supply will pull back. Just kind of curious from your on the ground perspective there in Atlanta, what are you seeing in some parts of the market that are still building a lot, still getting a lot of construction? What are some areas of Atlanta that seem to be red hot from that perspective?
We have the Midtown, West Midtown, the Old Fourth Ward. A lot of our in-town markets have been very hot and continue to be very hot. Seems like in-town Atlanta has been considered in the past several decades as dangerous or whatever, or not favorable. It's like people moving to Atlanta, Michael, here we can only live north of I-285. And I'm like, nah, that's good. Yeah, don't move to Midtown and Morningside or Virginia Highlands, because that's where I live and I don't need your traffic. But yeah, all the in-town markets are very popular in Atlanta.
Yeah. Yeah, and a little bit about the background of the space that y'all are working in. Again, you work across the Southeast, it sounds like. Is that just a preference of local geography, or is there something about the Southeast that you feel like is a stronger part of the country for a particular reason, or is it kind of a combination of both things?
It's dumb luck.
Dumb luck.
Yeah, I grew up here and started, as I said, started managing apartments and learning the industry at 18 years old. And so, yeah, I think it's really dumb luck being in Atlanta. And then when we started doing a lot of work for sellers and lenders in the Great Recession, all that, I didn't think it was that great. But and when we would sell properties for them, they'd ask us to start selling properties everywhere. And that's when we kind of grew regionally and sometimes nationally. And so, I think a lot of people do like the Southeast, and I think the prospects are good. And it was more luck than anything.
I like that. Just dumb luck. Well, there's something to be said about that too. It's it's almost impossible to time real estate, or any market for that matter. And sometimes luck comes into play, but luck can also come into play geographically. Atlanta itself just kind of had the luck of being where it's located, and the history of Atlanta has lent itself to, being the hub of the Southeast, just kind of based on dumb geographic luck even.
Yeah, it's been great. It's like, some people would say, well, why you grew up in Atlanta and you're still there? Why are you still there? It's like, it kind of has, except for the ocean, it kind of has everything I want. I do like to the water, and I like the ocean and boating and all that sort of thing, and diving, but we're not that far from the ocean, right?
Right.
Yeah, it's just a great market to be in here.
Yeah, we're based here in Dallas, and I think we see some similarities between Atlanta and Dallas in a lot of ways, and a lot of those tailwinds that support investment, development, and really even lifestyle for folks looking to relocate to those areas, I think makes a lot of sense. And one of the reasons why those two areas are really viable investment development targets.
Yeah, I think we've got a lot of diversity here in our businesses, and a lot of strong colleges, and we've got a lot of great big companies here, and then we have the world's busiest airport, and we're able to fly almost anywhere in the country and fly back in a day, except maybe California. That might be too long, but it's a convenient place to live. It has a lot going for it.
Yeah, for sure. All right. Well, I'm going to switch gears on you a little bit. You said something earlier that I think our audience might find interesting. You started in this space at 18, 19 years old. Looking back to 18 or 19-year-old Michael, what would be some advice you would give yourself starting out in the industry today?
Buy more apartments.
Buy more apartments. Buy sooner and buy more.
Yeah. I think, apartments are a great investment, and just, in commercial real estate in general. So, I've always been a broker and helped my clients get rich. And I've basically not competed with my own clients, buying and investing in the same property type. So I own some properties that I've bought throughout the years that are free and clear, and I'm glad I bought them. So if I went back to my young self, I should have bought more of those, right?
I like that. Just which would have bought more. That's funny. Yeah, I always like asking our guests, because again, we've had guests working in all parts of the industry, just a little bit about their background, how they started out, and I always like that question of what advice you would give to yourself. How about a young broker that's looking to cut their teeth in the space? They're hungry, they want to get out there, they're not sure where to start. What would be some bits of sage wisdom you would give to some young brokers out there?
Well, we're looking to grow our multifamily teams. I guess one will be talk to me, but I think one is learn how to prospect properly, take care of your clients, treat everyone in a transaction the way you would want to be treated if you were that person. Keeping in mind who your client is, but that'll really build your business. Using integrity in your business. Knowing the market really well, studying the market really well, becoming an expert. When I was only selling apartments as an agent, I knew all the best lenders. I knew all the comps. I knew how to renovate them, how to manage them, how to lease them, how to do collections. And I think the more you learn about it, the more helpful you are and the more opportunities you could see. I was able to sell properties, apartment projects that experienced brokers couldn't sell because they were concentrating on the cap rate or price per unit. And with my experience level and diving in deep, I was able to see opportunities. Well, if you do this and this and change this, that, you can get these rents. And now we can adjust your projections. And then I helped a lot of folks buy apartments that they otherwise would have passed on by helping them operate them properly. So I think it's just being beneficial to your clients and adding value to them and not being jealous of them, maybe not competing with them and helping them do well with their properties in all aspects.
Yeah, we've been hearing some of that too on kind of a different part of the industry, but looking at properties and the services that they provide their residents. There's a lot of competition out there right now. Residents have a lot of choices with all this supply coming online, which is causing occupancy to drop. And lower occupancy just means more options for residents. And we see that as a good thing because supply is the best way to alleviate our national housing crisis. But just curious to get your perspective on this. Looking at 2024, we hear a lot of concern out in the market. People aren't sure where rents and occupancy are going to land. How much concern are you hearing in the apartment space? Is it people are actually concerned about 2024, or maybe there's just a little trepidation, but people think that the market's going to be in pretty good shape? I guess phrased differently, how real are the concerns out there in 2024?
Yeah, I'm not hearing too many concerns about multifamily moving forward. It seems like that we're selling some pretty large deals and then some medium and smaller deals, and almost across the board, everyone is very positive about the future of multifamily. And back to your other question or thought earlier about tenant strategies on your operations. One of the things I see there that I think is helpful to property owners and asset managers is to do more tenant surveys and get an idea of what they like and don't like. I was showing a large property the other day, and they have a trash service that you put your trash can out in the hallway and they pick it up and they charge every tenant for that. Well, so when those residents leave their hallway, they're walking through a hall that's got trash in it. I mean, is that income causing you more turnover? Is that really, you want trash sitting in your hallway? And then, this community is very well kept and very nice. But then they have some stairwells that are just seem like they haven't been cleaned since the building was built 4 years ago. And people are more healthy today, and a lot of people are taking the stairs. And so I think, getting in touch with your tenants and getting feedback from them is important to help you reduce turnover.
Yeah, absolutely. And I think that there's even some I wouldn't say disconnect, but some changes as the apartment audience, if you will, is transitioning where, the youngest millennial, I think, is 28, 29 years old now. And Gen Z is replacing a lot of those millennials. And there's some there's some difference in preferences. And I think, just understanding the preferences of those residents is something that we're, again, hearing a lot from the operations side. And I think it's a huge key in the industry for some of the reasons that you mentioned. Now, I guess keeping on the 2024, I want to before I forget this thought, keeping on 2024, looking forward for the next 12 months, what really excites you about the, and not necessarily just apartments, but what excites you about commercial real estate from a brokerage perspective?
Well, I think the 2023 kind of had a lull with transaction volume and people trying to understand pricing as sellers, and buyers, frustrated that sellers weren't adjusting prices to the new cost of money and the new cost of debt and equity. So I think we're seeing more of people get comfortable with that. I think one of the things that's exciting me is, when the Fed came out and said, hey, we're not raising rates and we may even reduce rates. And I think that's exciting for our industry for 2024 is that, all right, well, now we kind of know where we are and we can move forward, and knowing what's ahead of us, if you will. And so I'm excited that I think transaction volumes is going to really pick up. I don't think it's going to be 2021 again, but I think transaction volume is going to really improve. And as a broker, and then all my friends and folks that I deal with, a lot of the economy is helped with transactions, with sales happening, right? So that's what excites me.
Yeah, I think there's more than enough reason to be excited for those same reasons. Just, like you said, rates may not come down all that much, but at least we have an idea of where the Fed's head is at. You kind of now have a better idea, and at least the uncertainty seems to be removed, because the same time last year we were like, how many hikes? How significant are those hikes going to be? And I think just having a little bit of certainty should help the appetite for investment. Now, again, the good news is that the appetite for investment never went away. It wasn't like folks were just like, well, we're gonna totally look at the 10-year Treasury, for example, as an alternative. The commercial space has still had that appetite. It's just where interest rates were and then where the valuations weren't necessarily congruent. But I think that congruency is starting to finally line up. So that's good to hear that you're seeing something similar, being much closer to the space than I am.
Yeah. And, if you can get interest rates, in the 6 range, and when I think about that historically, I've been in business a long time, 35 years, and those are good rates when I think about it historically.
Yeah.
Right? It's not the free money, but still good rates. And I remember my first multifamily I bought was a little triplex when I was really young. And I think at one point my interest rate was 17%, and I made money.
Wow.
With that property. I made money. Most of my profit was when I sold it, but I still made money. So, we can make money with higher rates. We do have to just look at the adjustment in the underwriting.
Yeah. Wow. 17%. I mean, we've heard about that from some folks we've talked to, but it's hard for me to wrap my brain around, because again, I've come up in the industry at a time when interest rates were, like you said, basically just free money. Well, I appreciate the insights there. Just, again, I think this is where some of your experience is really going to be helpful for our audience. I did have one more question before we get into our wrap up here, but within the Southeast in particular, having grown up in Atlanta, still living in Atlanta, have you seen a shift in preference towards some more of these, I don't necessarily want to call them tertiary markets, but, places like Athens, Georgia, places like Greenville, South Carolina, Knoxville, Tennessee? Have you seen more emphasis on investment appetite in those spaces? And if so, what do you think is driving some of that?
Yeah, I have. And I have seen more interest in secondary markets, if you will. And I think part of that's a return driven, right? If they can't get it in a major city, the return, their hurdle they're looking for, they'll kind of look at some smaller markets that are stable, that maybe have less new supply that could come into the market, that are still strong markets. So I think a lot of it's return driven. And I think another thing we're seeing is, the interest in mixed use properties. right? So those properties tend to operate well and get higher rents. And like I have an apartment myself in a mixed use development. I have a home on Lake Lanier, which is 43 minutes north of Atlanta. And so I keep a really nice apartment, and I really love it. And it's walking downstairs and having restaurants and shopping, and it's a great environment. So I think we're seeing more interest in secondary markets, more interest in mixed use.
And I think you're seeing that in those secondary markets come up a little bit more where, again, I'll call out Greenville, South Carolina, where there is kind of this, let's call it a quote unquote it factor somewhere like that, where those mixed use properties can really make sense. And, I think some of those other markets, Knoxville's maybe a little bit different. It has the college there. So of course it's going to have some uniqueness to it. Athens, same way with UGA there. But, I think that the evolution of some of these smaller markets has meant that some of them really are worth taking a look at. And I think that there are a lot of those smaller markets, or really even within Atlanta, you could say some of those outer lying submarkets that maybe at one point were true exurbs are maybe now starting to be more suburban. And again, I think that they can offer a lot of opportunity. And it's interesting to hear that you think a lot of that is indeed returns driven.
Yeah. And then I think, a lot of these suburban markets too are developing these city centers, right, where they have more shopping and entertainment and restaurants and housing. So, I think that's part of the drive. These markets, you can live in these markets and stay there all weekend, and have the entertainment and everything that you need. And we see that driving some of those suburban markets, right?
Yeah, absolutely. And again, just here in Dallas, which has a lot of similarities with Atlanta, of course, that's exactly what we see, where at one point a suburb may have been totally bedroom community. Now it's got the stuff that actually you want to stay there for. You don't have to drive 40 minutes to go to the city center, just to have the nicest restaurants to go look at, or, to have those more quality malls to go shop at. I guess malls can kind of be hit or miss, but there's more staying power, I suppose, and I think that informs the investment outlook in those areas too.
Yeah, I mean, my lake house is near Gainesville, a little city in north of Atlanta, and it was kind of dead for years, and now we have great restaurants, we have great live entertainment. I went online a couple of weeks ago, and Marshall Tucker band was playing live.
Oh yeah.
So surely that's a tribute band. No, it was freaking Marshall Tucker. I'm like, wow. Yeah. You don't have to leave these markets to enjoy life.
That's funny. Yeah. Marshall Tucker band. And for folks that haven't heard Marshall Tucker band, definitely recommend giving them a shot. I guarantee you'll hear a song or two that you're like, oh, okay, I've heard of this one before. But
right.
Yeah, that's funny. Just kind of throw a fun question in here for our audience. Who are some of your most recently played artists on Spotify or iTunes or whatever streaming service you use?
I use Apple and Music, and they do this thing where they showed you what you listened to in 2023, and and was like, I hope no one really sees this because they might question the wide array of music I'm listening to, from a band called Love. To old bands like Journey, and then I go to a lot of live music. And so I have a playlist of all the live music that I've heard. And, I do everything from country to what might be considered pop and music. So a little bit of everything.
Yeah, that's funny. Those year-end summaries are always fun to review, and I won't put you on the spot and have you reveal all of those, but and honestly, we could probably talk about music for another 30 minutes, but I don't want to keep you too long here. But again, Michael Bull, everyone, check out Michael's show. And again, your podcast, where can people find it again?
So it'll be on the podcast app on their phone, whatever they use. America's Commercial Real Estate Show. It's on Apple Podcasts, and if they just want to go to the website, it's CREshow.com.
Excellent. All right. Well, Michael, thanks so much. Really appreciate it. We'll hopefully be in touch again soon.
Carl, thank you very much.
Thanks for joining us for another episode of Multifamily Talks, a RealPage podcast. As always, the views expressed are those of the individuals participating and not those of RealPage.